Hey everybody, I'm Zach.
And I'm Jesse.
And you're watching Disruptive Investing News, and let's get right into it.
Yeah, let's check in on Polestar. This is the Swedish-Chinese EV maker.
Yes, Polestar is a subsidiary of Geely, which is the Chinese automaker. It went public with a SPAC last June. It's PSNY ticker symbol on NASDAQ. Its current market cap is about $11 billion, and it's dropped about 49% since going public.
But of course, people only want to care about Tesla when it drops.
Right.
Nobody wants to talk about Polestar. So first, strong sales numbers for 2022. Over 51,000 vehicles delivered in 2022. That's mainly the Polestar 2 vehicles. It's up 80% from the prior year.
Revenue of $2.5 billion, up 84% from the previous year. So I do want to point out that as of May of last year, Polestar had been guiding for 65,000 deliveries, and then they did that trick where you lower guidance to 50,000, you blame it on supply chain issues, and then you over-deliver, which is supposed to make the stock analysts happy.
But you didn't fool us, Polestar.
So Polestar now has 158 locations in 27 countries. That's up from 103 locations in 19 countries at the end of 2021. So they are growing out pretty well. Polestar CEO Thomas Inglath says, our business will continue to gain momentum through the year as we start producing Polestar 3 and with Polestar 4 in the starting blocks.
Polestar is guiding for 80,000 deliveries this year, which would be a 60% increase.
Again, this will mainly be the Polestar 2, but the Polestar 3 and 4 should launch in Q4 this year, so there will be some of those in the mix as well. Those first Polestar 3s will be produced in China at Volvo's Chengdu plant, and then in 2024, production will shift to Volvo's plant in Ridgeville, South Carolina.
So I'm guessing to start taking advantage of the federal tax incentives and lower transportation costs and no trade tariffs.
Right. Those Polestar 3s should start being delivered in mid-2024. So a lot of this sounds rosy. Revenue and deliveries up. But Polestar's operating loss was also up 29%. So now I know that most of the media was painting a really rosy picture of Polestar's financials, which I'm still trying to figure out why. But let's look at the numbers. They still had a net loss of $466 million last year.
But Zach, that's half of the more than $1 billion net loss they had in 2021.
Sure. But Polestar is still guiding for only 4.9% margins that they had in 2022. So selling more cars isn't going to help them stop the bleeding, at least for this year. And I didn't hear anything from management that gave me the confidence that we'll see Polestar start turning a profit anytime soon.
I mean, I do think that Polestar will benefit from Tesla opening up their supercharger network in Europe and the U.S.
No, I agree. I think that one of the hardest parts for all of these companies is that they have really crappy charging networks in Europe and the U.S. And so Tesla opening up that charging network means that you get to kind of check that off the list. So, I mean, that helps them out. But I want to go back to the line on their financials. Look at this line. It says listing expense of $372 million. That's the cost of getting listed on the NASDAQ. Woo-wee.
So that is no chump change, my friend. I mean, wow.
Yeah, I mean, wrap your head around that for a second. Think of how many SPACs there have been. Okay, so 86 SPACs in 2022 versus 610 SPACs in 2021.
Now think about how much these exchanges make just on these companies going public alone.
So 86 SPACs, and if we figure that that's kind of like an average price to go public, that's $32 billion in listing expenses. Now, I know a lot of that money goes to lawyers and accountants and SEC filing fees, et cetera, but wow, 2021 would have been around $226 billion in listing expenses.
Good years to be in those related businesses, huh?
Yeah. And lastly, Polestar does have a bit more cash in the bank at the end of 2022 than they did in 2021, just under $1 billion. But I'm worried if they don't raise more cash, their runway could run out in less than 2 years.
Yeah. So what do you think? Write your comments down below.
Yeah, I mean, it helps that Polestar basically has a big backer, right? Geely owns them, and Geely is probably not going to let them go under. But I think to me, the biggest part came down to the 4.9% margin. If I had seen that number going up this year and it was like, oh, good, we're able to ramp up our margins, that would be hopeful.
Well, and let's talk about how you increase margins. There's two ways to do it. You either increase the price of the product. So if it costs me 50 cents to make a glass of lemonade and I sell it for $1, then it's 50% margins. I could raise it to $2 and now my margins just went way up. Or I could reduce the the cost of me producing whatever it is.
Right.
So you kind of hope that when you produce more of something that you get an economy of scale and that the cost of producing that thing goes down. That's kind of what Tesla's Investor Day was all about.
All about.
That was basically the overarching thing that nobody seemed to really care about because they're like, we just want new products. Where's your new products? And
No, do you know how many media outlets said that Investor Day for Tesla was boring event?
Right. And I get it. It's 4 hours long. And if you're a dumb media analyst and you sat there and you were like, this is so boring. I'm going to write about how boring it was. It's so boring. They're talking about all these smart people things. I'm not a smart person, so boring.
Yeah.
What am I going to college? This would be a class that I would skip.
But yeah, and the other part being that the numbers of cars that they're going to hopefully sell this year is, I don't know, just so low. In fact, it's kind of back to what they said they were going to do in 2022. And this is why we're not seeing their margins go up. First of all, they can't really produce a lot more cars. They are restricted by batteries, and they haven't really vertically integrated. So I don't know. I'm not that super excited about Polestar. I would like to see more of their new models and see what they offer, but I just think it's, again, too little too late. But let us know what you think in the comments below. I mean, this is a publicly traded company, so it is something that investors can get into. I just think that now it's clear you're competing with Tesla, and if you don't have a lot of competitive advantages, you're not going to win this battle. Thank you so much for joining us on Disruptive Investing News. We'll see you guys next week.